We continue in an environment of uncertainty, and we remind you that when it comes time in that last hour on Wednesday, we had a big move to the upside that happened in the last 45 minutes. You can see 640 took us all the way up to 644.11. And what's the key thing to keep in mind here? If you're focusing on that last hour, have Bollinger Bands out, have VWAP out, have an adjusted 20-minute out, and if you can catch momentum and you ride above that second blue line down here, the upside is monstrous. Now, this is luck, absolutely luck, but if you were buying the 640 call right around 315 yesterday, this thing finished not just in the money, this thing finished up huge. So once again, that last hour, we'll be focusing on that today when I am in the room, continuing just to keep this chart up during the day. Volume weighted average price, 1 minute volume weighted average price mixed with short duration Bollinger Bands with an emphasis on the adjusted 20-minute, 20-day, 20 SMA. Forgive me. Again, good morning, tall text, 1,200% return on the SPX yesterday afternoon. Hopefully you're using a strategy like this. If you got something better, please share. All right, show your work. You're here with us every day because at 9:30 you are the exit liquidity in the market. And once again, we are looking for some sort of pattern to emerge with the jobs report that is coming out tomorrow. But we had some bad news on the job strength. There we go. Look at that. Thank you, Tall Tex. I appreciate it. I'm glad to see, and that's what it's about. Sometimes there's luck involved. 1,200% return trading, volume weighted average price, and Bollinger deviations. Good job. That's awesome. All right. So whether the market's safe to trade today or if it's a trap day, it's always safe. It's just a matter of how you manage your risk. Where is smart money positioning? We'll talk about that today in the runner, and we'll do our screeners as always, both the runner at 9 o'clock, but also take a look at the stocks that are in breakout and breakdown mode. And if we have some time, we'll talk a little bit about Piotrowski Graham, because once again, Macy's was one of the leaders on that list last week. Macy's popping above that 20-day moving average. It was cheap, and it just absolutely ran yesterday. Big pop after that earnings report. So what are we looking at today? Well, again, when it comes to momentum, this is problematic. It's the fact that we have that -10 number. Now, we're taking the number of stocks in the S&P 500 that are in very specific breakout conditions. They're up a certain percentage on the week, they're up on the month, and they have a beta that is above market at 1 to 2. We take the number of stocks that are down a certain amount in 5 days, down on the month, same thing with the beta. And then we subtract the breakout stocks from the breakdown stocks. When this moves negative, that's where we want to start to play a little bit of defense and just be aware that there is money leaving the market across the board. But the question is, where is it leaving in the S&P 500? Is it leaving at the top of the S&P? So when we look at the SPY, remember, the S&P 500, the SPY index, the weight of those stocks is heavy by individual equities. And you have NVIDIA representing 7.7% of the index, Microsoft representing 6.9%, Apple representing 6.3%. When you total all of this up, you're now seeing the top 10% of holdings represent 37% of all the S&P 500. And why does that matter? Because these are the very highly liquid names. These are the names that are utilized for leverage strategies by hedge funds. And when this stuff unwinds, the market can and will go down very quickly, as it did from that February sell-off and ultimately that March into April collapse that we saw. So we're paying very close attention to what is called the FNGD. This is a leveraged inverse ETN for FANG debt. Okay. So again, when we see this start to move higher, it is signaling that we are seeing deleveraging in those big top 10 names in the S&P 500, and that can obviously lead to sharp downturns in the S&P 500, given the fact that the weight is 37%. And once again, as goes NVIDIA, and so goes Apple, so goes the rest of the market and other leverage places, and people starting to dump corporate debt, that becomes the kind of panic button that we see. If we break above that 50-day moving average on the FNGD, that's where we start playing a lot more defense. So very, very cautious in this environment. This is a place to sell calls on existing positions, and it's telling us that there is some radical positioning ahead of tomorrow's report. So we have cautious positioning ahead of payrolls and services data. This was done at 8 o'clock. So again, the Dow futures were flat. Paying attention to where we sit right now on futures, you are effectively flat. S&P 500 is barely moved, 5 whole points. Woohoo, very exciting. Dow Jones has barely moved. Russell has barely moved. But it's crude that continues to sell off. We've talked about this and highlighted this with the OILU. We saw that oil was overbought 2-3 days ago. We were a little early over the wall on that, cutting a position in some of these other names, but the high beta stocks in the upstream continuing to sell off. Apache has now moved down to 22.25 from 24.10 a few days ago when we were highlighting it. Once again, paying very close attention to the RSI, which is the relative strength index, and the MFI. When these are overbought, it tends to present an opportunity for profit taking. We got a little early on this, but again, the thesis remains correct. As we look at this right now, private payroll and data services are what are in focus today. And the market is kind of on pause because, again, of tomorrow's data set, which will come out. The ADP numbers came out this morning, and private payrolls increased by only 54,000 in August. That's very far below the 75,000 estimate and down sharply from the July revised version of 106,000. So that number adds to an already concerning picture for the U.S. labor market, and it shows significant cooling in private sector hiring. And as I pointed out, most of the hiring in the U.S. economy over the last 8 months has been in healthcare and effectively social services. Those are government jobs by proxy. Weak jobs will obviously lead to the stronger case for rate cuts, but weak jobs also confirm slowing economic momentum, which can spook equities that are not tied to that Magnificent Seven, but really those Russell 2000 stocks that are heavily reliant on the U.S. economy. So the same thing, same trade every single day. Pay close attention to the SPY and the QQQ for an index reaction. Look for moves down to these third standard deviation bands and potential reversions. We had one yesterday at 10:15. Tapped that bottom band at 641, and we pushed all the way to 644 in less than 45 minutes. This is the way the market will move when we get into these environments. What we ultimately see is a period of lower highs and lower lows. Markets don't go straight down. The algos are absolutely manipulating everything, especially when we get down into that third and fourth deviation. You're going to be watching the TLT as well for bond moves as traders price in more rate cuts. And the volatility, obviously pay attention to the VIX and the UVXY if volatility does spike. This ADP release puts even more weight on Friday's non-farm payrolls, and now the week's defining moment, obviously. All right, on top of this, what did we say? What have we said all year? What have we said since March of 2024? Gold is going higher, and it still feels cheap. And there's a reason for this. Ongoing monetary inflation. We are on a 7-day roll right now. Gold is holding high right near its all-time highs, and we are currently sitting at 3607. We hit 3621. We were at 3650, I believe, yesterday. Not going to be shocked if I see some sort of profit taking after this almost manic move in recent days. Looking at the GDX, which is the miners, big pop. We are oversold at this point, or forgive me, overbought at this point. So as I've said, there's an opportunity to sell spreads back down to that 50-day moving average. But this is one of those periods where you may just want to let this thing cool off a little bit and look for a possible reentry back at that $60 level if we do see profit taking, and I expect that we will. Weak economic data has markets betting even harder on those rate cuts. Obviously, that's bullish for gold as well. And instability in the bond market is pushing investors into safe havens like gold. In addition, central banks around the globe continuing to buy gold. And as I said in April, one of the very weird things that happened in the market, I had not seen this before. When we sold off in April, typically what happens when we have big financial events that lead to, a big sell-off in the S&P 500, we typically will see people pile into the dollar. That's what the reserve currency is supposed to do. So when we had these periods of panic back in late 2023, the dollar bullish index went up. Same thing back here during the gilt crisis. People piled into the dollar, big weakness in the European markets. When we had COVID, when we had the Silicon Valley banking crisis, this is the Archegos event, where a hedge fund imploded, trying to make single direction bets on a handful of individuals' equities. People piled back into the dollar. And here's COVID. The US dollar surged during COVID because, again, this is the instrument in which all debt is repaid, most of debt in global markets. So people scramble for dollars because that's what they need to either A, refinance existing debt, or B, pay off existing debt. Well, what happened in April? People did not go into the dollar. And I had not seen that before. The reserve currency did not act like the reserve currency. What are people moving into? Other assets. They bought into stable coins. They bought into Circle and Tether and things like that, which are synthetic dollars. But there's been a lot of motion back into gold since April as well, despite the relatively short downturn. Not a big move down. But look at the GDX move since April. We are now up more than 50% from the bottom of that April crisis. So this is very critical. This is probably going to continue, obviously, but there will be some hiccups along the way. GLD, the GDX, TLT, IEF for bonds, and of course, watching the dollar index, weakness in the dollar. If there's further weakness, it is another tailwind for gold. The key here is signaling caution. If traders are piling into these safe havens, it's not just about gold. It's really about risk appetite across the world. Finally, as I noted, oil prices continuing to slide. OPEC supply expectations are weighing on crude. That's the headline, right? But the reality is that if we looked at the OILU, which is the leverage oil and gas production ETN, we were overbought on RSI and MFI. And I highlight that every time that we get overbought on both RSI and MFI on the OILU or even the XLE, that's typically a sign of positioning among CTAs, and same thing with oversold. When you get oversold on the OILU, that becomes a contrarian opportunity to go the other direction. CTAs are underpositioned, and we look for opportunity for people to step in and start covering positions or to start bottom buying. And right now, coming off this selling, key thing here will be whether or not this holds its 20 and its 50-day moving average. If it breaks under that 50, that becomes a short for every major upstream oil and gas producer. And then again, what you're looking for either this quarter or possibly next quarter is a move down into oversold territory. Because once again, when we get oversold, that becomes the position to cover. That becomes the position to take the contrarian move. And we've seen multiple times, combination, oversold, a little bit of a squeeze, just looking to scalp and take advantage of what the market is giving to you. Brent's down a little bit today. WTI down today. Primarily, the headline numbers will be U.S. crude inventories rose unexpectedly, and that OPEC is considering increasing its output at this weekend's meeting. So again, the trading angle is on the USO and the XLE. I don't like to trade the USO, but I know other people do. I just don't like focusing on funds that have futures involved in them, mainly because at times when something major geopolitical happens, you may very well see a disconnection of these funds from their net asset values. That's something that happened with wheat ETFs back during the Ukraine war, and it just makes it very uncomfortable and difficult to position. So I prefer the XLE. OIH can give you some leveraged exposure to the oil field services companies, and obviously watch futures contracts, WTI contracts for intraday moves. This does seem to be a supply-driven story unless OPEC shocks the market by holding output steady. Crude looks heavy and looks like we're going to continue to move possibly back down and test that $60 level relatively soon. All right. We are massively unchanged. Absolutely. It's 9 o'clock, which means one thing. You know what it means. Zarana. All right. So we start with American Eagle today. These commas in here. Why do I keep putting commas in here? I need to clean myself up. AEO. American Eagle breaking above that 50-day moving average. Big move up today. A lot of strength here. So this is going to be a name to watch largely on a huge earnings report, by the way. This is going to be one of those names to be trading and looking for reversions today, looking for pops, moves that take this stock potentially even much higher, and then looking for a reversal. Same thing. Keep this on your screener. You got a pretty nice little spread here of about $1 between the five deviation bands. Don is going to definitely get one of those sequenced AEO shirts. What were those things called? Didn't Pitbull used to wear them? That'd look good. You should get that. Something with a dragon on it. That'd look good. I don't think I've ever been in one of these places. I did not even know what they sell. This looks like this these look like every kid that I've ever seen in a high school. It's like basically everyone who ever went to high school is wearing these clothes. Oh, there's a kid with the Yankees hat. That's cool. He should put it sideways. Definitely a dragon, Don. Definitely a dragon. All right, where is the runner? Have we posted that? All right, we got AEO to start. We have CPB, Campbell Soup, getting a little bit of a rebound after a pretty dismal sideways motion. This will benefit, obviously, from interest rate cuts. Forgive me. We're looking for continued strength here in some of these consumer defensive stocks. And a lot of people have been asking, well, when do I buy some of these names, particularly Campbell's, which has fallen from roughly 50 down to 30 over the last 6 to 8 months? The answer really is when it can start to crack above these moving averages and we start to see some strength. We got a positive move here on the MACD, some strength on the RSI. The MFI is lagging a little bit, which signals that this is not very strong volume just yet. But as far as trading it back at that 3260 level, hey, everybody needs soup. I think that's the lesson here. Finally, which is Agilient Technologies. Nice break, nice move here. Looking for a break here above the 126.44 level. That is the key figure here. So we're going back to these recent highs that we've had back in July. We could break that. We can obviously continue much higher. This is in the health and diagnostic space. So just write this down. 126.44 is your line in the sand. Looking for continued strength here on the MFI. Looking for continued motion here. Not much of a short float, about 1%. But again, one of these names that has really shown stronger, increasing, improving momentum since April. Really strong sell-off that happened right around our negative signal that happened back on February 21st. Big move down, bottomed out like so many other stocks did in April. But it has been a smooth rebound, and I would, again, look for new potential highs, keeping that stop tight back at that 200-day moving average, but then looking again at that 126 level. KKR is getting beaten up. And this has been a very slow bleed for private equity. But one of the things we got to pay attention to is the long duration bonds and what type of exposure they may have there and what type of exposure they have on concerns around the U.S. economy and the questions of the impact on the private credit side of markets. Look into this, breaking under that 50-day moving average. I think a relatively simple trade for this is buying the 135 put and selling the 130 put, going out a couple of weeks. So again, you're just looking for another move of retesting that 200-day moving average, which currently sits at around 130, breaking under that 50-day moving average, and just trying to tap that line and see what type of support it can have in the next couple of days or weeks. So again, 135 or 134 if that option exists. Out 2, 3, maybe 4 weeks, maybe even out to October with a retest of that, the put that you would sell, which is the 130 level. Let's pull that up real quick. All right. Take your time. We're in no rush. Thanks, guys. These are based on the existing numbers. So can I go out to October 3rd? That's too wide. October 17th. You're going to want to get a better price here. 125 down to third Friday is it? Yeah. Okay. We'll wait for these spreads to even out a little bit. But point here is you're buying. Where are we? We're at the 135. Forgive me. Knew that number was off. There we go. All right, $2 trade, but again, this would adjust based on opening prices. So $2 to make 150%, 133, 46% probability of profit. And what I want you to do before you make this trade is make sure that you have opening market numbers, but just know where your stop could be. If this stock goes back up and you've got a it's probably going to be about 137 will be the 20-day moving average in the next 2 to 3 days. Then you know that this is where your stop is, 12 to 15% stop in the next week and a half, just in case the stock rebounds. But you're looking to take it down to that 130 level. So that's where your exit is. It's around a 35% gain that you're aiming for. So you're willing to lose 15% to try to make somewhere between 30 and 35% in the next week and a half if momentum continues to break down. National Vision Holdings. I mean, I guess. I don't know about this one. I would not be shorting this unless I get some sort of confirmation that it's going to get resistance at that 50-day moving average, which is around 2312. So add it to your list. Watch the 2312 level, and if we roll over at that technical level, then go to the downside. ASTS. Don't know what you do. Some sort of mobile communication company. Great. I could have guessed that they were not profitable and that their price to sales would be 33.46. These are companies that should not be public yet. Here we are. High short float, 21%. This is more of a stock that I want to trade to the upside when the squeezes. And that's actually kind of what I'm be a little bit concerned about heading into the next couple of days. I'm going to scratch this because the beta is 2.4. And if this jobs report comes in and the market rallies, these are the types of things that can squeeze. So keep an eye on this, that 50-day, that 200-day moving average. If the market reacts positively to this jobs report, I'm looking for a move up here. If the market does not respond well, I'm looking for a retest of that 200-day moving average. So there may be a possibility here to do some sort of straddle, but 47, 17's your line in the sand, upside 60, downside 34. Ugh. Completely unprofitable. 3,346 years of revenue to justify its price. Negative cash flow, negative EBITDA, negative PEG, negative forward PE. I don't know, man. I guess. Whew. What a world. All right. Breaking out communication services. Again, strength and momentum. Cyclicals in strength as well. Very positive for the market. Again, showcasing the expectations of rate cuts. Financials continuing to show strength as well. Consumer services have really moved. And of course, that comes back to the Google announcement from yesterday. And materials lagging a little bit today. Looking to buy the dip actually on materials, particularly copper, gold, and silver if they present themselves. Rotation from the small caps and energy into the Mag 7 breaking down. We had technology breaking down 1.5%. We'll be keeping a very close eye on the XLK and its core moving averages. And of course, the industrials, which are weakening on concerns about the broader U.S. economy. Why bring up a horse race when you got glue? Okay, here we go. Let's try this again. Back at that 464 level, support near $5. Watching that move above the 20 and the 50-day moving averages. And again, just buying the stock, trying to ride the momentum. Your stop is right back at 475. Pretty simple. And looking for a breakout, possibly back up to that 625 level. UVE clearing its 20 and its 50-day moving average as well. Universal Insurance Holdings, a little bit of strength coming out of here. This is more of just buying the stock and trying to ride it back up to that 27, 28 level. Stopping again right below that EMA, that 20-day EMA, looking to lose $1 to make $4. And SIGA continuing strength in that healthcare momentum right above that 50, 20, 200 stack. Well, it's gaining steam. We're going to continue to see if it can hold. If this breaks under its 20, its next test is going to be that 50-day moving average. And from there, looking down here. So riding it here. If we have to turn right back over, we go short, and you got about $1, 60 cents, 70 cents to play with. You can do a lot of damage with drug manufacturing and breakdown stocks. Very heavily insider-owned stock, very cheap on the PE, very cheap on the EV to EBITDA. This is a very cheap company. I'm actually shocked nobody's buying it, but that's probably because it's only about a $612 million company. All right. T. Rowe and Goldman making a $1 billion deal. What happened? Now that, to buy $1 billion of Goldman's, of T. Rowe stock. Okay. I was going to say, if T. Rowe Price was moving into Baltimore, things were about to get real intense. Owings Mills would just have gold everywhere. Just, oh man, that's wild. I have to reach out to a friend of mine who works there. That's pretty significant because most of these people are paid in stock, and they were not happy in April when I was talking to them. So that's a big deal. T. Rowe is a tough company to manage because, again, they are in the active management space, and they just have not been able to keep up with the ongoing outflows, and they seem to take it personally. If you ever listen to their earnings calls, their executives seem to get pretty defensive about what's going on with the company. So this is it would place Goldman in the top 5 T. Rowe stakeholders behind Vanguard, BlackRock, State Street Funds, and Charles Schwab. That's pretty significant. I'm really curious to know what. I'm going to have to dig into this a little bit more. All right, CRM had earnings reports. We talked about this, and this was one of those names that I said you got to pay close attention to these key moving averages, and you have to be able to be willing to trade around the deviation bands. So CRM is right square in the middle of the strategy that we want to be focusing on today. Pull the stock up. What do we got here? 915. Let's see. That's a big move down. What we're going to be looking for on CRM is actually going to be insider buying and see if any of the executives step in and buy the stock today. What you're looking for, keep it on the radar, 235, 236 level for a possible reversion. Short duration on options expiring tomorrow if you're going to be speculating around that. On the insider buying front, let's take a real quick look at that because it's been a little while since we pulled this up. Up. Stock screener. Insider buying. CEO, CFO. 10% owner. Finance of America companies. Don't know what you do. Advanced Flower Corp. Summit Midstream Corp. That's a good company. This is rare. Very rare. Once again, 10% owners stepping in and buying shares. You could see cluster selling that happened earlier this year. This is the first insider buy in 5 years for the company. And again, there's going to be something going on with this company. SMC, not a name that I followed very much, but I do know the name just from, again, the midstream side of the world. It's gotten beaten up, as has a lot of these names. So we'll dig into these numbers and let you know. That's a pretty high short float, by the way. I know it's only 4%, but that's actually pretty high for a midstream company. It's not usually a lot of names in this space that people are actively trying to take it into the ground. Let me take the 10% owners out and focus only on the CEO and the CFO. Western Union, again, we've talked about this. WU, stock was bought down around like that 730 level. It's just continued to burn higher. It's paying around a 10% yield, which I don't trust. But I do say that usually when the CEO and CFO are buying the stock and the yield is high, it's heavily protected. And signals that they're going to obviously be paying it out. I did like the idea of selling a spread down here on Western Union somewhere around the $8 level. But once again, this is a company that's probably going to become obsolete within the next 5 to 10, maybe even 15 years if we are doing cross-border payments with crypto. Ugh, I don't even like saying that. It makes my skin crawl. But the idea here is that hopefully, their costs come down. It's backed, continuing to get a big insider purchase. I don't like to speculate too much on this name. I've been burned by it in the past, BKTT. But I will just note that we had a lot of success with that BTBT group in the crypto space where that stock nearly doubled. So if you want to take a little bit of a speculative play on this, I would be watching just for the RSI and the MFI to improve, or at least to break above one of these key moving averages before entering it. It is a pretty sizable buy. Once again, 1.47 by the CEO and president of the company, Sudhir. And on this, Eastman Chemical, Eastern Bank Shares, Aero Financial, Match Group. Match Group, eh? CEO, $500,000 and bought $2 million back here. So I don't know what they're betting on, but 37.60 buying into strength, by the way. That's pretty fascinating. That's bullish because, again, he bought at 28. He bought another $500,000 at 37. What's the clean way to trade that? Sell spreads down here. Might even do that today. Match Group. Telegram for Mr. Baldwin. Let's see. We got a couple minutes left. All right, so a couple of things going on. Looks like the insider buying ratio is tanking. Yeah, so that's we're going to be heading into when are earnings reports? October. So we're going to head into a blackout period relatively soon. But yeah, that's problematic, right? That's the contrarian signal that the market is stretched. And even the filing numbers are down as well. So you have insider filing, buy to sell filing, and then you also have the dollars. The dollars are what we're always watching, right? Because that aggregate has continually called the bottom of major events. And it's also, it hasn't accurately told us that the market is overstretched, but it does tend to correlate and coincide with it. I'm not going to say correlation's causation, but in this case, if the insiders aren't buying in like hand over fist, then I ask, why are you? Why would you be doing that? But nonetheless, you got to remember that executives are always selling. So this is a reflection not just of the lack of buying, it's a reflection of the fact that you have executives who are compensated in their stock, who are selling because they are compensated in their stock. Now, Walgreens Boots Alliance, this selling seems to be more tied to the private equity deals, so that could be skewing the data set just a little bit. In addition to that, if we look at this ratio, you can obviously see where's the screener? There we go. You could see Walmart, and again, it's not necessarily just you're seeing 1.8 million, 200,000. Look at the Walton family. They sold $390 million in their stock. What do they do with it? Well, I don't know. Maybe they bought a football team, right? It doesn't really matter why they sell. And again, a lot of people are compensated in stock. So that's obviously going to impact that ratio. So it's why I always stress that you want to pay very much more attention to the spikes in the buying and then go one by one on individual equities and see if there's any opportunities emerging. Reynolds, there's been a lot of buying in this stock in the last couple of weeks. Directors, and it's always interesting to see, middle management people, VPs, controllers, chief accounting officers, $500,000 putting down their own money to buy the stock. REYN. Once again, another one of these names impacted negatively by interest rates. Big move down to start the year, 27. Now you're starting to see buying come in. Well, what do we do here? Sell spreads to the downside. Go back and look at these recent lows in June and now try to take advantage of that and even buy the stock below where these executives did, 23, 21.70. Well, you can replicate that with a good option spread, and you get paid. If the stock does fall back down to those levels, you're comfortable buying it because all of the executives are buying it at that level. They've viewed it as a value. But if it doesn't reach that level, you just pocket the cash. That's the strategy. All right, everybody, it is 9:20. It goes by so fast. I will be back at 3:30 today. I'm not doing the full hour because, well, I don't know if you saw the schedule. Don Kaufman will be back today at 2 o'clock to talk shadow clocks. So make sure that you click the link and you are all set for that. And we will be digging deeper again today in the last half hour into the jobs report and opportunities as they emerge, hopefully in that last 30 minutes. I hope everybody has a good day. Don's going to throw some music on in a moment, and I will be back tomorrow, 8:45, for the show as usual, because the show must always go on. Have a great day, everybody.